Welcome to Markets Now. I'm Michelle Rook along with Matt Bennett with agmarket.net. A mixed day in both corn and livestock futures trade on Tuesday. Matt, let's talk about corn and soybeans. It felt like soybeans kind of pulled the corn market along, but when that dollar index broke, that really kind of was the catalyst, or at least what kept those two markets together today, wasn't it?
Yeah, it sure seemed like it. You know, the start of the week was kind of a defensive tone. You come in here on turnaround Tuesday. Fortunately, you're able to see some buying kind of take place. And anytime that you see the dollar get hit like it has, I mean, it's certainly going to lend some buying towards commodities. I've got to think, again, you know, I've talked about this a lot lately, but this time of year, you really need something to drive the market higher. Yes, we all know that the crops are smaller than what we thought they were maybe 6-8 weeks ago. But at the same time, that's old news at this point. So you got to continue to come up with information. Today's information, quite frankly, was the dollar. Dollar was sharply lower for most of the trading session. And that definitely is going to help our ag commodities, because we know it's going to get us a little more competitive on the world market, particularly whenever we start talking about corn.
Part of yesterday's problem with soybeans was a big pullback in soybean meal. So soybean meal was up today. And, you know, there certainly is some talk about China exports, and that continues to kind of provide a little underlying support for the bean market too, doesn't it?
Yeah, absolutely. You know, I think that China is probably one of your bigger stories. You know, the bottom line is, I mean, whenever you look at the world balance sheet, we've got enough beans, and we're probably at a healthier situation on beans than what we are with corn, I guess, from my vantage point. Whenever you look at Brazil, for instance, folks talking about 150 million plus crop, that could be a huge crop down there. We don't know what the weather's going to do anymore in the May and the moon, but we do know that they're planting more beans yet again this year, which certainly gives them a little bit of leeway. You've got to expect that with normal conditions, they're going to have a pretty good sized crop. And so if some of the relations between U.S. and China continue at a strained pace, there's no doubt that a lot of this export business could shift. Now, as we move forward here this year, especially next year, we know that there's a lot of renewable diesel demand that's going to be hitting the market. Crush plants going up in several different places here in the heart of the Corn Belt. So, you know, bottom line is, for me, we may lose some export business, but moving forward, I sure hope a couple of years from now, we're not as worried about losing that export business because we're using more beans domestically.
Yeah, let's hope that's the case. From a technical standpoint, though, we kind of bounced off support in the corn market. But if you look at the charts on both corn and soybeans, we're effectively sideways. Do we stay that way for a while?
Yeah, I mean, there's going to be a breakout at some point, you know, and this time of year, a lot of times your breakout is certainly to the downside. I've been telling folks, you know, typically your path of least resistance this time of year is going to be lower. We know that it's pretty tough to get a market to rally into the heart of harvest, but at the same time, many times whenever you get halfway or better through harvest, you start seeing things like basis firming even more. It's exactly what we've seen the last several days. Some of these areas where harvest is starting to wind up, people are pushing 15, 20 cents, you know, even in areas like central Illinois where you've got phenomenal crops. You know, they're talking a 210 Illinois yield in the national debates, 172, but Illinois, 210. It's huge, but you're still seeing basis levels at a very strong pace. And so I've got to think that, you know, maybe this harvest low type discussion, maybe we just didn't get one like we typically might see. But be cautious as a producer. You've got to understand that this market is going to break at some point, one way or the other, and there's no guarantees it's going to be to the upside, not by any stretch.
So if you have extra bushels, what do you do with them at this point?
Yeah, my personal opinion with extra bushels is that I want to go ahead and quantify worst case scenario. You know, a couple of things come to mind. I do think that the basis is going to have to move bushels from the east to the west this year. We know that. We're already seeing that. Some of the basis levels in Kansas, $2 over. I mean, I know folks that are harvesting corn in southwest Kansas getting $9 a bushel at times here lately. And so, you know, why is it so high? Because they've got to draw bushels from places other than there to feed the plethora of cattle that you've got in that part of the world. And so, you know, I guess you got to understand a rising basis in some parts of the Corn Belt is likely going to be a tide that lifts all boats. And so I've got to think that you've got the opportunity you know, to go ahead and reward the market with strong basis levels. And then if you want to stay long, there's a lot of things you can do. Cheap standpoint, I guess, you know, limited risk scenario. I don't want to make a really good sale, a not so good sale, or even a bad sale. Don't want to try to get get cute with a market that has offered me the opportunity, especially where we've got APH or better yields, to have flat out incredible income.
So the wheat market setting back here despite the big pullback in the dollar, but it was really about some of these rains in HRW areas, wasn't it?
Yeah, and I don't know that we had enough in enough areas, but at least we got rain, and part of the areas west of the Mississippi, especially. I mean, this is just a serious situation. Whenever you look at the drought monitor, even where we're at in Central Illinois, where we had pretty good rains this summer, just dry as a bone as we finished up harvest. Field fires, they've been across the Corn Belt. It hadn't been just relegated to the Western Corn Belt, but these rains are super important whenever you look at getting this winter wheat crop established. They're also super important whenever we look at potential to maybe get a little bit of relief for our river system. So we certainly don't want to discount that. A 2 or 3 inch rain is going to help. It's not going to fix the problems, but if we could get a little bit of a follow-up event, and a lot of times when you get a rain like this, you see a pattern shift. And so if we could see that happen, by all means, I think it could really be a really good thing, not only for your wheat growers, but for the export market, which is going to affect all of us.
So a little consolidation in the cattle today, but live cattle cracked out some new contract highs here pretty much all the way down the board. So do you think this is just a little bit of a correction of our overbought status, and then we take the next leg up here? Did the funds buy on the break?
It's interesting. That's a good question. I've been friendly cattle for quite some time due to the fundamentals of the cattle market moving forward. I know a lot of cattle got liquidated. And then whenever you step in here and you see that actually your equities markets are a little bit stronger, it tells me that as long as the consumer's got a little bit of money in their pocket, I don't see beef demand going anywhere. And that's at a time whenever beef supply is not going to be in overabundance by any stretch. And so I'm not so sure that you're going to see higher highs. I mean, I feel pretty confident that you're going to see higher highs. Now, what the timing of that might be is going to be anybody's guess, because there's a lot of bigger picture items, equities, you name it, that could weigh into this cattle market. But at the same time, you've got to understand, in the end, how many cattle we've got out there to kill versus how many people are wanting to eat them is going to be very friendly towards the cattle market moving forward.
All right. Thanks so much for your time. That is Matt Bennett with AgMarket.net.